Hello and welcome to A Woman's Guide to Investment. So you are entering the world of investing. Good for you. All you need to do is follow these 5 tips and you're on your way of becoming an investing pro. Tip number 1. Don't be afraid to invest in stocks. Many people think that having money in a saving account is better than investing in stocks. They are scared of losing money. They might invest in something, the price drops, so they become worried and sell out hoping not to lose money. They are thinking short term and lose money that they might have gained during the long term. Tip number 2. Have a plan. Before you invest, you should sit down and write out your personal plan. What do you hope to achieve? Do you have a good strategy? All of this is important because in the future you will be reviewing your plan to make sure you are still on track. This also helps when the market gets rough. You may be tempted to sell out and run for a safer investment. But by reviewing your plan, you can see what your goals are and why you are investing the way you are. It will help to keep things in perspective and keep you invested over the long term. Tip number 3. Don't trade, invest instead. Trading is when you are constantly buying and selling funds trying to avoid losses and earn a high return. Unfortunately, this rarely works. In fact, the average investor only earns 2% while the markets earn 8%. The market fluctuates every single day. Instead, just invest. Create your plan, pick a few investments, and continuously add money to these investments on a regular basis. Tip number 4. Choose passive investments. There are 2 types of investments out there, active investments and passive investments. Just know that actively managed investments, mutual funds in this case, are run by a portfolio money manager who is trying to beat the market. A passive investment is a mutual fund that is simply going to match the returns of the market. So, which philosophy should you follow? You should choose passive investment. Tip number 5. Know the investment fees. When it comes to these fees, know that you have to pay a management fee with mutual funds and exchange traded funds. However, unlike with other things in life, you don't get what you pay for. Paying a higher management fee does not guarantee a better return. In fact, there is no correlation. You are better off paying the lowest fee possible. Luckily, this is where passive investments come into play again. Since a passive fund does not employ a management team to pick up investments, the fees are much lower. Now go out there, make money, and good luck.